Hello, welcome to another episode.
Morning.
Morning. Did you have a nice weekend? It was all right, thanks.
It is early in the morning. It's like 10 a.m. And so I finally get to like trade during the open trading hours. I have my sandwich. I haven't eaten breakfast yet. Sorry if you don't like watching people eating food. I might take a bite or two. Honestly, maybe even not, because when I get like in the zone, the sandwich is literally right under my nose, but I kind of don't care because I'm more excited about this, even though I haven't eaten or really drinking water all day. So anyways, so I thought like, let me dive into potentially like some day trading, because right now I have 0 positions. I don't have anything. I haven't put anything in. So I really need to get some trades in. Otherwise, I'm just wasting potential like money that I could be making. So real quick, I'm gonna go through and see if like I see anything interesting. And what I mean by interesting, so first let me say though, I'm on like a 5-minute candle, and what I'm looking for, I don't want to go short because I don't want to do like a day trade like options. I just don't want to do that. I'm just gonna go long, so I'm hoping that the price is gonna go up. So what I'm looking for, like real quick, I'm just gonna be like scanning through these these stocks, and I'm gonna be looking for something that looks like it's on the lower end, and I see something technical analysis wise that looks like it could be starting in a positive trend, looking for like some kind of breakout. Real quick, a breakout is like the moment right before the trend starts. You know, looking for something. So right now this looks like it's pretty stagnant. However, there was a positive trend before, and this could be that's sometimes indicative of a positive trend coming as soon as there's like a break. Like if I'm gonna watch this, I'm just gonna watch it. Nothing obvious here. It's too hard to tell. Too hard to tell. Too hard to tell. Too hard to tell. Interesting. This is interesting, but it's Google, and like the volume's usually like a little low. So like the trade sizes don't typically, I don't know. I kind of, for some reason, I don't like to trade Google. I think it's just because like Google and Amazon, I just don't, their volumes are a little like on the small side. I mean, they're plenty big. It's just, actually right now they're a little big. They're usually a lot smaller, so that's interesting. But I typically don't trade them because I guess I don't like, their personality. But this is actually looking really good for something like that. In the past, I've mentioned like when there's like a really big candle, there's likely to be a reversal. And actually, this is a really good candidate for buying to go long right now. However, I mean, yeah, this is the biggest low in a while, and it's matching this low that like this, it hasn't been this low in a long time. And so it just tried again to go lower and it didn't. There's a support here. So actually that would kind of give evidence that it's not going to go any lower, and now the buyers might be rallying. So actually it's good supports. Good buying pressure is happening right now. The volume could be better. I mean, it's probably a good thing there's not so much volume right now, because then otherwise I think it would have rallied already. The only thing I'm a little hesitant to buy like right now, because after like one big candle, things just get very volatile and hard to predict. because like it seems like obvious. Like, what do you mean, Jude? It's so obvious. There's obviously a rally right now. It's like, or there's it's gonna trend, but not always. But you know what? Sometimes you just gotta go for it. I mean, it's checking a lot of the boxes, but I have a bad feeling. That's the intuition, and the intuition is saying things get very volatile, and there's been a lot of negative trends. But the thing is, it's hit a floor though. It's hitting a support. So I don't think. I think that's a little safe, so that should like make me feel better. So I might want to do a trade there, but let me just like look real quick to see if I see anything else more obvious. Tesla scares me. Aston Martin, I don't know why I even look at that company. Ford, no. I don't know. What is this? Oh, GameStop? Do you want me to make a video about the whole GameStop thing? I know a lot of people that like don't totally understand what happened there. It's not very complicated. But like a lot of people don't know exactly what happened. And I think it's pretty informative actually, but it is like kind of a video on its own. And now we're starting to see it, like it was the birth of meme stocks pretty much. And now there's like meme stocks like AMC, and it's not saying that like the stocks are completely useless. It's saying something different, but that's a whole like video. And so AMC is also a meme stock. Netflix. GM. So far, there might be some potential with Google and this actually, Meta. I think I think I've already missed the opportunity with Meta, to be honest. I'll look at it. I'll keep it labeled. American Express. No, definitely not Amgen. I don't see anything with Bank of America. Cat. There might be something with Cat. Let me keep my eye on it. I realize I'm not really explaining because I'm trying to move like super fast. So I'm sorry that I'm not explaining my intuition like I promised. But so here, I mean, we see a positive trend, and then at the end of one day, or in the after hours, there was a lot of buying for whatever reason. And then nothing really happened, and a lot of after hours buying right here too. So whatever reason, a lot of people are buying after hours. And it's a clear trend, and maybe it'll happen a third time, maybe not. Usually like trends dwindle off. So this one looks pretty similar to this one. So I'm like thinking like, oh, maybe at the end of today, there might be another situation. And so that's kind of cool because then you don't have to worry about the pattern trading rule. If you have a lower account size, then you can like when it's getting close to like 4 o'clock, so like 3:30 or something like that, and it's looking like this exact thing is happening again, just like this kind of happened, then you can buy into the stock, and then like hopefully your prediction's right, and then the next day you made quite a bit, and then you pull out, and then it like you pull your money out, you close out the trade, and then it doesn't count as same day trading. So that's the strategy that a lot of people use, and it can be good. But like, it's kind of, I see it as like, I feel like you can't really like learn much, and there's like other trading strategies where you can use more information to like make a better prediction. So like, I'm not a big fan of that, but I know it's a thing, and I know you can make money off of it though. So I don't want to like totally dismiss it. That's something you can do. I don't know. There might be a reversal in these two. Honeywell and IBM had such a deep downtrend right now. It might bump up a little bit more. I mean, there's still like the buying, looking at the MACD, there's still a lot of like buying. They're losing buying pressure, and the selling pressure is going up because of this trend. But I think there might be like a little correction. Question mark. I might see something else going on here, but I'm not gonna explain it. Maybe another episode. Nothing. Ooh. This is Sparta. I like, okay, so real quick, looking at like support and resistances, support, resistance, support. Fill in the blank where you think the next resistance is going to be. If the supports are going higher, I like this. I like the way that it looks. I like Johnson & Johnson, and I'm not sure why. Wasn't this similar? Oh, wait. I swear there was something similar looking. And the reason why, if you've noticed, like, as I'm like flying through these, that a lot of the stocks, like price actions, like a lot of their shapes look similar to one another, it's because a lot of these top companies do have like similar, they do, because they're all grouped up in a lot of index funds. So like when one is bought, another one is also bought at the exact same time at the same volume. So that's why we do see a lot of like similar price action. And so that's why some people don't like to trade these, but like, I think there's plenty of money to be made. I mean, you could be trading a lot, like a frequency, like often like day trading. You could be trading 1 or 2 trades like a day, and you could potentially be making more money. Or like, I mean, it all depends on how much you have invested. Like if you're like day trading like $100 per trade, and you're making 1% per trade, and you're making like $1 or $2 like a day, then that doesn't mean anything compared to like someone who has $100,000 and they're trading once per month, you know, like so I wouldn't get too hung up on should I day trade or should I long-term trade, because it's honestly more about your lifestyle. And that's why like I kind of shopped around with a lot of different strategies so that I could find one that I liked. And I like the stimulation of day trading. It grabs my attention. It's It forces me to do a lot of thinking really fast, and my brain likes that. But I burnt out like so hard after like a year of doing that. And then also like when I started doing film and other things, and like the other things being like having a life, like trying to like go to the gym and like try to like meet with friends and stuff like that. It's like I was like, this doesn't work. And so I found another trading strategy, the one that I've talked about in the past, where it's 4-hour candles and like 2 weeks to a month and a half long trades. I'm pretty happy there. And recently I've been making anywhere between like 10 to 20% a month, so I'm pretty happy there. That's plenty, because it really just depends on how much are you trading. It doesn't matter how often you're trading. With day trading, you definitely want to look more at like, so like, I'm pretty interested in Johnson & Johnson right here. Yeah, I'm pretty interested. So like I would want to look at like a 3 to be like, okay, so with the 5-minute candles, I'm like, I see a positive trend here, some stagnation, and then there was a positive trend, but then there was a reversal. But then it like, so like the new low is right here, right? And then there was a positive trend, there was a reversal, but then the new low is right here. So like technical analysis wise, that's saying like there's still momentum going up. If this was the same, if it went down as far as here and matched this support line, I think that'd still be good. The only reason why I wouldn't want to trade this is if when it came back down here, it went lower. Then I'd be like a little afraid. But because it's higher, there's still positive trending right there. And so to look at that under like a microscope, I go to a shorter time, and you know, it's pretty much the same thing. I'm gonna go to a shorter time, and it's still, well, now we see a little bit of a reversal, whereas like in 5 we kind of see that, but it's not like nearly as obvious. But in 1 we see some clear direction going down in a lot of ways. So if we look back at 5 and we're like, okay, if it goes down for a little bit, does that scare us? Maybe. So I'm looking at 1 again, and I'm like, okay, so if this trend size was like 0.3, and this so far, whoops, this so far is 0.1, and it turns like anytime soon, I might want to buy right then. And it's looking like it kind of maybe, maybe it is, maybe it isn't. And that's never a good time to trade. When you're like, maybe. No, don't trade. If you're uncertain, don't trade. Also this, like, so like how we normally trade, like in when we're looking at MACD, and this is usually the start of a negative trend, like right here. And it's already like negative. It's already been trending down for like a little bit. So like it's a pretty good chance that it's gonna keep going down, or at least like leveling off. Let's go back up. See here, it doesn't look, when you're like looking, when you're kind of like backing up, it doesn't look like it's downtrending. It just looks like it's leveling off. And so you get into this question of like, okay, so when do I get in? How do I know? Like everything's happening so fast. What do I do? This is day trading, and it's like there's a lot less like reliable things to look at. Like there's a lot less structure, and there's a lot more randomness, and there's a lot more chaos, and that's stressful. And so it's hard to stay cool. And like, yes, it can make you a better trader, but also like not really. Like when there's less things to count on. So for example, like on 1 minute, when we see that like usually on the bigger time frames, when the MACD is like, when the buying pressure is surpassing the negative pressure, like for an example, like right here, it's pretty spot on usually on the chart. Here it's not, and it's close, but it's never really like very spot on. So details are a little like off. Tools that you use to, like indicators and resistance lines. Resistance lines still help you out quite a bit in like very short-term trading, like day trading. But indicators are less helpful because indicators are representative of the price action. So they're always going to be like a little, like at least like 1 degree from the truth being the price action. So when things are more random and less predictable, can I justify saying more random? When things are more volatile, less connections like can be easily made, put it that way. So there's a lot more intuition, there's a lot more personality that you have to understand to day trade. Like that's why like you're either a day trader or you're not, because like, for example, if you were to be relying on the signals and stuff that I've talked about in the past, and you were to be relying on indicators to kind of like reinforce your thinking, like should I get in now or should I not? Like buying right here, if you were to buy right here, like it was like, oh, yeah, this indicator looks like a pretty good signal right here, and you know, yeah, and you're only basing it off that one thing, it goes down like a little bit and then it starts going up. And so you might like buy in right here and have like a stop loss like right here, and then you just straight up lose, and then you're like, what the hell? And so, you know, you have to base it off your trades a lot more about personality. Like you have to really get to know Johnson & Johnson and spend some time with them and really like kind of know, like, do they hug, and do they hug the Bollinger Band, and typically how big are their trends? Like this one's like 0.25. This one is 0.3. This one is 0.3. This one is 0.22. And so like kind of like log that. And so it's like all around like 0.2 and 0.3. So it's like, okay, that's good to know. And then like, okay, are there, like if it were to be like kind of staying stagnant, then you would assume like, okay, the negative trends are also similar, but that's not happening, at least in the very recent past. So how big are their downtrends? 0.5. Almost 0.2. So that's very different from the 0.2, 0.3 positive trends, except for this 0.2. But you can see a consistent 0.2, 0.3 positive trend, but then the negative trends are not as consistent. So it's like there's something to be learned there, and there's something like to be familiar with. because day traders are probably gonna stick with the same company as far as like who they trade. That's why some people ask, like, do you trade the S&P 500 or do you trade the Dow? And real quick, what those are, they're just collections of certain companies. That's all it is. That's it. And so they're really, when someone's asking that, it's basically saying, what companies do you like to trade? And especially if you're like a day trader, it's like, you know, you'll hear like, oh, do you like Coke? Or like, I don't like Coke right now, maybe in like a month or something like that. Or people will be talking about stocks like people, or like referring to their personalities. So let's continue to look. See here, if you were to look at resistance lines, this low is here, this low is a little higher, this low is a little higher. If I were to back up, so that shows like generally like a positive trend. But then if we were to back up and we look at this, we see this as a negative trend, but it's positively trending on a shorter time frame. So we can expect a little bit of positiveness. And so if we expect that, then this will be the new support. This was the previous support. So we see a positive trend here too, if that were to happen. This is a prediction. So so this kind of has to be satisfied first. Like we have to see a positive trend here, and then it's still pretty invisible on the 5 minute, but we'll know that it's like kind of coming. Another thing though with like day trading is like really doing that, because I've mentioned in the past, like when you do a lot of technical analysis, you start basing facts off predictions, and then you like take that as like truth, and then you base other predictions off those predictions. And so like if you're wrong fundamentally, then everything after that is going to be wrong as well. So that's why like technical analysis gets a lot of doubt, and rightfully so. And so that's why I only kind of take it a little farther, and I keep it in my mind, but I usually don't like act on it. Like right now I'm not buying, even though I made those predictions. I was kind of waiting for it to be satisfied, and so boom, it kind of was right there. So here's a positive trend. The new support is a little bit higher than the last support, which was higher than the last support, and I'm going back up, and now we see the same thing, like this support is bigger than this one, higher than this one, and then this one is higher than this one. So we see a positive trend there. Now let's say like I'm thinking like, okay, this is like, I see some potential for it to be, for a positive trend, something to grab. Is it worth it? Now we have to think about, is this one worth it? Especially if your account size is lower than 25,000, you can only day trade a couple times. Because like, let's say Johnson & Johnson doesn't trend very much, or the trends aren't very big, and you can only make like, I would only do like 3 of these a week. And like, let's say like, oh, I think this can only go about this much. That's a 0.24% like trade. Like, money is money, you can grab it when you can, but that's why I kind of like looked everywhere first, because like if I look at, I don't think JP Morgan had anything, but let's say JP Morgan, let's say I analyzed this and I thought like, oh yeah, I can go up to about here, and then like, oh, that's a 0.65 potential increase. So like when you have limited trades per week, you definitely want to pick the right one. So you want to like kind of scan through and see like what has the most potential. Actually 3M is looking really good right here actually. And if I were to look at the last one and kind of see generally how big it was, 1.6%, that's actually pretty good. What was the time on that though? 19 hours. So in one day, 19 hours still, or wait, 1 hour. Oh, interesting. So you definitely want to judge that. Now, if you have an account size bigger than 25,000, then it doesn't matter. You're fine. Something I also want to talk about is, so like on the, I think it was the other day, I can't remember which like practice it was, but there was a trade that I did that was like 3 days, 4 days, 5 days, somewhere in there, and I think it had a return of like 3% or something like that, and that was way more predictable. And I mean, you know, if you compare it to, you know, trades like this where you're like scalping, you're like barely getting a little bit, and you're doing so much work, and it's so much more risky. I just see it as just way too close. Like, it's just, you're doing so much more work, you're getting so much more stressed, and that's super important. Like, don't underestimate like being overstressed. And I've decided at this point, I was gonna do some day trading, but I've decided at this point I am not, and this is why. And this is ultimately why I stopped. Let's say that I go for these and I you know, I look before, I think like really it's not, at the very most it'll be like 0.5%, and you can only do like a few of them if you have a smaller account size, and that's probably who I'm talking to right now. And you know, we did look at 3M where this was more attractive, like in a 1 hour, like this could definitely happen today. A repeat of this is like 1%, but you can only do a few of them a week. And so I definitely like to reserve some same day trading chances for emergencies. So like, let's say that I really think I put in some real positions, and I put them in, and then for whatever reason something happens, an emergency happens, either personally or like in the market, like I don't know, something like that happens. I want to be able to pull at least like 3 or 4 out. I mean, 4 is like, you're gonna get slapped, but you know, it's better than like losing a big chunk of money. Maybe you have to determine that on your own, but let's say I put in 3 trades, and then something crazy happens and the stock market starts like plummeting, and I want to pull out immediately. That's gonna count as 3 pattern day trading. And so I just kind of like reserve. I like having that little extra safety net, like the just in case. And so if I were to be using these though and making barely any gains, I just kind of I don't see the worth. I don't see it being more worth than trading on a slightly bigger time frame, slightly longer time frame, and making like pretty much the same amount of money with less stress, more time to be thinking about things, and having that safety net of, oh, I can pull out anytime I want, or I can pull out in an emergency if I need to. So those are my qualms, I guess, with day trading, and that's why I'm not gonna buy something right now. I still need to put in some like positions, but I think I'm gonna go to a higher time frame first. But I did want to address that. But I mean, so those were the cons, and I talked about the pros earlier, and like, yeah, there are still pros of day trading. Like, if you do find like if you have an account size of 25,000 or higher, or and you do grab like these, and you find like 1 or 2 of these size trades a day, and then you get like 2%, 1 to 2% a day, and you don't have to worry about anything else, and you have more money to be trading with, and that's fantastic compared to, you know, getting 3% in 4 or 5 days. You know, that's less than 1% a day. So it's a little bit better, but I just don't see it personally. I don't see it worth the stress, because it adds up.
Okay. Cool.
I just realized I just like rambled but talked. I'm pretty sure I covered a lot of different things about day trading if you were interested in it and you were wondering like what goes into it, I think I explained like a lot of things of like what I would do and how I would do it, because I had full intention of actually day trading right now, up until the moment where I was like quiet for a minute and I was like thinking like, I don't want to do this. so there it is. There's some info about day trading. But yeah, the next video, I'm just gonna do it like right now. I'm gonna stop this one because it's super long, and then I'm gonna go into the next one, and it's definitely gonna be I'm gonna back up, higher time frame, and actually do some like real trades, and then we'll look at the potential gains and all that, and like I'm actually gonna put in some trades because I need to, because I'm not making any money right now. So I'll see you in the next one.
On the next episode, Jude has a huge epiphany and will never trade the same again.